a really great time last week about our trading strategies according to our indicators. I have been spent a lot of time to analyze this current time frame, high time frame, support resistance concept, and then this concept that have 800 lines about codings right here. As we can see, 800 lines. And it brings me a really good result to understand that low time frame and high time frame resistance and some key areas here. It perfectly fits the indices market. It's presenting the most trend here and with the daily average day range, right? I think that this might be a really good trading plan, aligning with my time, with my strategy, with the time frames as well. But I do think that this strategy is still a little bit lacking. So the idea is that I'm always waiting for some of the breakout about the price that will go higher or go lower. I need to have a really good confluence between high time frame and low time frame together, which means that will be fine for me to waiting for some signals, but also not easy for me to read price action immediately. It will miss out a lot of opportunities, and also it will give me some of the false signals to trigger my orders. For example, we see that the idea for high time resistance supports this resistance right here. The idea it goes low, perfect. When it's chasing back, before this candle fire, we see this resistance. I might think that this is still a good resistance area, but pull, it breaks out, right? That gives me some stop loss already. And then in another day, I'm coming back from here to here, which is recovering my stop loss to like these areas here. I am thinking, what if that breakout or the trend changing is not really a real-time price action reading? So I have another theory, and I encoded another coding. We have this code just finished today. We have almost 700 line of code. After I'm coded this, I think that it's time for me to change to another strategy. So welcome to my new strategy right here. The idea is I'm gonna to look more bigger pictures. It included some of the ideas from the premium discount or some support resistance area based on the pivot. The pivot we can see is higher high, lower low, higher high, lower low. Is the price movement from this pivot low comes to this pivot high. And with our moving averages and our OTE as what I'm used to, definitely we have a new concept called density areas here. So what the density areas means is about resistance or support areas. We see that the price are fractal. Price will have some of the price actions between certain of the zones. If that comes with these candles right here, it just break out sharply to these areas here and starting consolidation, comes back to grab all the price before it's moving higher, right? So the idea is also aligning with the moving averages and our strong support resistance areas by densities. We see that at this point we have a density 6.70. We have these huge density areas. This is 3170. And also we have these areas 17, 26, 18. Right? So based on that of the density areas, we see the majority time that pivots from these areas low, off of that come to these density areas and retrace back to the previous high, which is these density areas, and start consolidation. Come back, touch to the previous density, going low to the non-density area, coming back again, grab the order, come down, and grab higher, and then come down, right? So the idea is we are following the 20 MA and the 200 MA, give us some of the retracements or the change indications. And this I'm tested majority of the indices markets, it works. We see that this is SP 500. We can see this density area rejections. Here we have overbought, and we're going down to these density areas, and we're going up, going down, we're going up to these areas, take that high, from this density back to this density area, we're coming higher high to previous density area, starting consolidation, bring that overbought conditions, coming down, and we have another row here, going another side to this daily fair value gap. And then after it touched this fair value gap, it's bouncing back to the density area. So the density areas, it acts as a value holding. Okay, it comes from here to here and holding these areas here, and then it started consolidation, goes up to previously high right here, and then start consolidation during FOMC. We're coming down to previous high, we're going higher high, and the density areas is changing its color. Multiple markets are showing that the AI calculations give us a really correct density areas for the price might trace back, might coming higher. And then we based on that this concept, I can see I might need to change another mentality to read the markets. Okay, so that is some challenge for me for the next week. Hope that we can have a really positive earning and give us a challenge. We will never disappoint about us to have another challenge in the life again and again. Understand that how the market is going, understand how the price action is moving. Give us another challenge that we change our mentalities.